So I read that last year that the debt financing made up at least a quarter of financing raised by companies in Africa. So what role do you think debt will play for African growth companies going forward?
Look, I think debt will continue to play an important role. I think particularly for, shall I say, asset-heavy businesses, and you've seen, a number of embedded finance companies in an Africa context, FinTech context, being very successful with raising debts internationally, but also locally. And I should emphasize, actually, the local debt markets are increasingly becoming more sophisticated, increasingly becoming deeper. So that is becoming definitely an important tool for growth companies. That said, I think the discussion is broader than debt. It's, of course, you've seen a year in 2003 where equity funding in general in the private context slowed down. We're starting to see signs that is reversing. So globally, year to date, there's been over $100 billion raised in equity growth capital. And that is trending to surpass the levels that we saw last year. So that definitely bodes well for fintechs and growth companies in Africa, and of course, investors will continue to be very selective and will continue to back companies that are frankly solving real problems and solving big problems with the right with the right management teams. And I think one recent transaction which I think was fantastic to see was the recent funding round from Move, the global mobility fintech, which received some investments from, say, a US company in Uber, and a fantastic inspiring story of founders that found a real problem, solved that in Africa, and are looking to take that elsewhere.